Before we are joined by our guests today, I want to let you all know that the SAG-AFTRA Foundation is a nonprofit organization that relies entirely on donations to provide emergency assistance and free educational programs to SAG-AFTRA artists. This conversation is made possible thanks to the generosity of our supporters. Over the past year, the foundation has given over $7 million in COVID relief to more than 7,500 performers. If you are a SAG-AFTRA artist and need help, please don't hesitate to ask. And if you can give help, please give. All right, information can be found in the description of this video, and thank you so much for your support. And once again, welcome. All right, now, without further ado, it is my pleasure to introduce to you Emily Churchill, Ronnie Steadman, and Ernie Charles. Giving some silent applause here. Welcome, guys. All right, I'm going to start this out with some fun facts. All right, so I'll ask each of you the same question. I would love to hear name, the city where you're at, and one fun fact about you that is not about the entertainment industry and not about taxes. How about, Emily, we start with you.
Oh, okay. Well, Emily Churchill. I'm in Glendale, right outside of Los Angeles, and I am a certified moonologer, so I can cast the moon through your birth chart. Yes.
I love it. I love it. I love it. Thank you for that. All right, Ronnie.
Yes, so I am Ronnie Steadman. I am here in Burbank, which is also just outside, right next to Glendale, right outside of Los Angeles. I guess I was trying to come up with one, but the funnest fact I can think of right now is that I am a proud father of two kiddos. One is 12 and one is 7, and they are absolutely amazing. And yeah, I was going to say they're better than everybody else's kiddos, but you know, I guess I shouldn't say that, but to me,
we're gonna feel that way about our own kids. It makes sense. It absolutely makes sense. Thank you for that. Ernie.
Hey, my name's Ernie Charles. I'm in Studio City, California, which I guess is considered part of Los Angeles, but or the Valley. Anyway, when I was a kid, 11 years old, I won the Grand Champion Pennant 2 at the county fair, and I still got the trophy. So that was exciting.
Fantastic.
This is great. I love these fun facts. All right, everyone, I'm Courtney Shane. I live in Los Angeles, and my fun fact is I collect Coca-Cola memorabilia, but I'm allergic to caffeine. 1 of 3% of the world actually are allergic to caffeine. So that is my fun fact. So that means I've never had a cup of coffee in my entire life. All right, so let's get this party started. All right, I'm going to start by saying, I love that you're all here. And I want you all to take advantage of the fact that this entire community is here. I mean, how many people do we have now? I mean, where's the participants? Give me 1 second. I mean, we've got 124 folks. I highly encourage that you network with each other. You're all at the same event. You can support each other, help each other out. So drop either your Instagram handle or your LinkedIn or anything that you want in the chat. If you guys want to connect with each other, if you're willing to chat about taxes after this, highly encourage that participation. I'm going to start with a couple of softball questions and get the questions going, and in the meantime, get that chat full of those networking opportunities. All right, so this is for all 3 of you, and we can go in the exact same order. The first question is that I see that actors ask a lot, is that now that we have higher standard deduction, is there really a point for actors to itemize and do deductions if they earn a lower amount as an entertainer? Let's start with Emily.
Oh, okay, that's a good one. So I would say, I mean, we know because the IRS until 2025, we can't write off our W-2 expenses. And we all get it here because we all pay commissions. We get it. I hear you. But what I would say to that question is, if you have more, I think the standard in California is 4,850 something, 840. If you have more than 5,000 in business expenses, I would say, yeah, I feel like on the California side, it is worth it. And every time I do my own personal return, I definitely see those expenses affect my California return in a very positive way. So that's my take.
Awesome. Thank you. Ronnie?
Yeah, ditto what Emily said. And I think if you live in New York, I think it's one of the other states that does the same thing. I don't live there, but I'm pretty sure. So it could be worth it. I'm not sure what New York's standard deduction is. And there's also just in general, overall, I just think it's good to be keeping track of everything anyway for your own personal knowledge, just to know what you're spending on your career. And you never know, because if you have a mix of income between 1099 and W-2, then some things can be done, just depending on how the deductions are applied. So I definitely think you should continue to keep your deductions.
Thank you. Ernie?
I'm going to concur with both of them. First of all, I've always felt it's important to keep your expenses. And number one, if you want to be a professional, then act like one. So that's important, if you want to work in this business. I know it's not easy to keep track of expenses. And I always say, if you're making 20, 30,000 a year and you're learning how to do it, hopefully you understand it. So when you start to reach 100 or 200,000, it makes more sense to you. Or maybe you're one of those few percent that start making $1 million in a year. You don't want to lose all your money as you make it. So if you understand it, some of the concepts, it'll make it easier. And eventually maybe you'll get really successful when you hire someone else, but you still want to understand where your money's going and how it's working. So, and like they said, they could, I agree with what Ronnie said too, but you could use it towards Schedule C income. You might be a QPA, which is when you make less than 16,000 and you can still use your business expenses against W-2 income. So yes, always try and keep your expenses.
Now, my second question is, there are some actors that have received a letter in the mail saying LA city, like the city of LA business tax, and you've been fined $1,200 because you don't have a business license or something to that effect. And so many actors are confused about it. What is this LA city business tax that some actors are receiving? And can we explain that a little bit further so that actors can better prepare themselves for their taxes? Emily?
Well, first off, y'all, don't throw those letters away. Okie dokie. I tell you what, I almost said a bad word. When I saw on Facebook that in one of these little groupies, they're like, oh, just toss that letter in the trash. Do not do that. Okay. I'm going to tell you this, and Ernie and Ronnie, if you know different info, please let me know. But the reason that you get the letter, right, is because you have a Schedule C 1099 income on your tax return and you are a California resident. So everybody that's not a California, I'm sorry, hold on with us for about 5 minutes. So what happens is your return gets filed, California gets a little ding and it says, hey, so-and-so lives in the city of LA, and that includes Studio City, that includes West Hollywood, right? So Burbank, no, Glendale, no, but it includes these villages within LA City. They get the info that you have a Schedule C. They do not get numbers, to my knowledge. So Ronnie and Ernie, if I'm wrong, please tell me, but they do not get numbers. So those letters are not accurate usually to your specific need, right? So all they know is that you have a business because it's a Schedule C. Now, again, even if you are like, I don't have a business, honey buns, yes, you do. If you got a Schedule C on that return, that is a business. Okay. So you need to know that when you're filing that's why you're getting the letter. And that's all I'll say. Ronnie and Ernie, you guys go ahead.
I want to explain a little, what you said is right on, Emily.
Oh, great.
I always think people, when they work W-2, it's a union job, they pay in Social Security, Medicare, federal tax, state tax, all taken care of. They even pay a city tax you don't know about, but you don't care. You just get the money. You're like, woohoo, I got money to spend. But when they decide, let's say you're working on a project, like it's a modeling job or maybe a trade show, and they pay you $5,000 and you get the full check, you don't get it, the Social Security and all that stuff's not taken out anymore. Then the city comes along, puts their hand out and goes, we want some too. Now, as you know, there's probably some references out there, but there's a way you can avoid the city business tax if you make less than $300,000 for small business, or $100,000 for small business, or $300,000 for a creative artist. And Emily was right on. I went down there once with one of my clients and visited, and they had sent her a notice saying she owed $630. And I said, and on the form it said that she made maybe $50,000. So we went down there and I said, where'd you get this number? They go, oh, we don't really know. We kind of make it up. And I'm like, well, I'm an accountant. I can make up numbers too. But I said, it's okay. Let's 6,000 is what she made. And then we proved it was in Beverly Hills. So she ended up paying like $30 in the end. So, but there's a way to get around it. Now I'm understanding they actually answer the phone, which they didn't before COVID. So Ronnie, I'm sure you have something to add to this.
Yeah. So you guys covered the vast majority of it, but I would just say that, don't panic. Like Ernie said, a lot of times, because they wait for 3 years, they wait usually 2 to 3 years to give it to you, which I think is a bit lame, but that's what they do. And so it racks up before you had a chance to ever exempt yourself from it. And so if you, once you get that, just know that they don't know how much you made. Just like Emily said, they have no idea. And so you just have to let them know, because they're basing it. If it's a personal return, then they're basing it on $30,000 worth of only Schedule C. And we're only talking about your Schedule C income here. So they're talking about $30,000 of your Schedule C income. And you may have done a print job for $2,000, or you may have done some non-union or theater or something, or some union theater, whatever. And so you just they don't know. And another little trick with that is that if you worked, I can't remember if you worked 6 days or less, or if you worked less than 6 days to make that money, then even if it's a previous year, you don't have to pay that tax. So you just have to let them know, I only worked for 5 days to make this, maybe it's $5,000, maybe it's $20,000, but if you got it all from like 2 days work, they can't nail you with it being a business. And then I think what wasn't said yet is that the key to that thing is that you gotta, once you sign up, I would suggest you go ahead and sign up with the city at some point. Don't necessarily give them previous info, just as if it started today. You start your business today. You sign up with the city of LA so that you get yourself exempted. And then every year you have to fill that renewal out before February 28th, or you can no longer be exempted. So even if you are under that 100,000 or under that 300,000, you still have to pay the tax. And that sucks when you shouldn't have had to pay anything.
I just hope a lot of people get over the 100,000 and have that problem.
Yeah.
Or the 300,000. Right?
Yeah. There you go.
Yeah, that's a great problem to have. And I'm really glad you brought up February 28th, because some folks might think it's April 15th, the deadline, but it's actually February 28th.
For the city business tax, yes.
For the city business, for your business license, right? For registering. If you heard that deadline, February 28th, throw it in the chat. I want to see February 28th in the chat. I'm actually going to throw a link to a blog that is specifically about what we just discussed about the LA City business tax. And that's in there too. Guys, keep the chat moving. If you want to chat with each other or encourage anything, that's fine. If you want to throw in your LinkedIn, your Instagram, anything like that to network with each other, keep it going. All I ask is that if you have a question, please put 4 question marks in front, 4 question marks at the back. And we won't be turning any videos off. I will be reading all questions, so please keep that in mind. Keep those questions coming along. I will share 2 more resources with you as you guys think of your questions and pop them in the chat. One of them, I don't know if you guys have heard of Miata from Abundance Bound. She actually was teaching some amazing finance for artists at the Actors Fund, and she also has her own business. And I am a member. I am not telling anybody what to do, but if anybody wants to do some research on this fine organization, that is a wonderful resource. Another free resource besides this lovely one that you're enjoying right now from our gracious donors, is the actorsfund.org. Actors Fund, also putting that in the chat, they have some tax events where they have volunteers that come and help you with taxes as well to empower yourself. I see budgeting nuts and bolts. Yep, some folks know what I'm talking about. So those are a couple of great resources. I'm going to plug one more resource as you guys continue to put your questions in the chat, and we'll get to questions. I am actually a moderator, not just for this, but also for a hyphenate artist mastermind. If anybody's interested in joining a mastermind, it doesn't cost anything. And if you are interested in joining, I am popping my email in the chat, putting a -- after it. Why it's called, yep, Miata. Miata's a person. Miata is the one who's running the, I'm just answering that question already, who runs Abundance Bound. So CourtneyShaneBiz@gmail.com if anybody wants to join the hyphenate artist mastermind. That's for actors, dancers, voiceover artists, producers, directors, writers. That is exactly how Ernie and I know each other. So feel free to email me and ask to join. All right, I am moving on to questions. The first one is from Tiffany. I have a W-2 with 2 states on it. My CPA says that he cannot enter in 2 states. When I have called to ask about this problem to the person who issued the W-2, they said that they cannot reissue the W-2 and to just put both state taxes in there. Have you all seen this before? And how do you deal with it? And we'll go in whatever order. You guys can just raise your hand if whoever knows the answer.
I'm just wondering if he's really a CPA or if he's got a really bad program, because you should be able to enter multiple states in any program. You should, I don't know what to tell you, because if he says you can't do it, then you can.
Yes, you can. That is false information. I've got a W-2 with 24 states on it. That is, I don't know where you're getting that, but that is not true.
So the advice is a second opinion.
Correct.
Yes.
Maybe check somewhere else out.
I didn't even understand the question at first. I was like, how can you not enter multiple states? What?
That's great.
Yeah.
We're dealing with actors. They work all over the world.
All right, this sounds asked and answered. We're moving on to the next question from Meredith. What tax write-offs can we as entertainers use?
There are many. And
do you have like a cheat sheet link to like maybe a worksheet?
I know that. I have on. If you look, I would imagine any of us have tax packets, because Chuck Sloan used to have one. I don't think it's still up on that site. I have it on my site, which is rsteadman.com. I know that M&M, I'm sure that they have one, and I would bet that Ernie has one. I haven't looked at his. So
all right, participants, somebody throw his website in the chat, rsteadman.com. Somebody throw it in the chat.
I want to say most preparers will have a tax organizer, is what they call it. And it's a list of all the expenses they can fill in and stuff. There was a seminar that the SAG Foundation just did on expenses and then income, about doing your tax returns, which you can watch. And they have there's called the VITA program, Volunteer Income Tax Assistance. I know New York is still doing it. And they provide packets with information about different things you can deduct and so forth.
And I'll just say, IRS definition is ordinary and necessary. So anything that's ordinary and necessary that you spend on your career to further yourself in your career should be an expense you can take.
I think a lot of times people get confused about there are certain things that you would only take at a percentage, but don't be shy to try to take a percentage of your cell phone, your internet, even viewing stuff. Typically, like the way I've always done it is you take 50% of that, because that's what we've kind of dealt with in audits and stuff. And so so certain things you might not think about, but that should be in anybody's tax organizer or tax packet, and that would be the best place to go look for it.
Awesome. For those of you just joining us, if you have a question, throw it in the chat with 4 question marks in front, 4 question marks at the back. Moving on to the next question from Angela. Can I write off my short film under unreimbursed business expenses?
I mean, I would say that's a tricky one. It depends on what the nature of your short film is. It could go there, but it's going to do better on a Schedule C if you have Schedule C income to write it off again. If you have Schedule C income that applies, I would say in that situation, you'd probably ask your tax professional, because it's definitely not out of the question to write it off on unreimbursed, but it also might be able to just go on a Schedule C. And if it makes any money at all, then that's definitely where you'd want to put it, because you're going to get much more value there.
I think, Ronnie, you're right on. It depends on how much you spend a little bit too. If it's a small short film that you spent $3,000 or $4,000 on, then you would try it. If you could use it on Schedule C, great. Otherwise, unreimbursed employee expenses that come through on the state return. A lot of times I consider it really the reason they did the film was so they could have use it for their advertising, such as a demo reel or something to show agents and managers or casting people that they can perform and what they can do. So yeah, good answer, Ronnie.
I agree. I concur.
We're all in on this.
All the points at that. Okay. All right. Sweet. Antonio asks, what about the East Coast? And if you're an LLC taxed as an S Corp, asking for myself, but also for others who may be in the same boat.
I'm so sorry. I don't get the question.
Well, there are 2 different things. There's an LLC and then an S Corp. They're usually separate. So,
well, no, but an LLC can be taxed as an S Corp.
I think that's ultimately the focus of this question is that if you're on the East Coast and you have an LLC that's taxed as an S Corp.
Right.
Not exactly sure, Antonio,
if you're
what that question is.
If you're talking about deductions, they basically the same rules apply with an S Corp as they would on personal returns. It's just that the way the tax, you have to do an S Corp return. And so it's a separate, that S Corp, the S Corp is where all of the expenses are going to be spent. So the S Corp is actually taking on the expenses. And then that you do an S Corp return first, and then that will pass through to the personal return based on, there's the S Corp question is kind of a broader question, but just in general, if you're talking about deductions, it's going to be basically the same type of deductions.
All right, this question comes from Scott. What's the rule on writing off mileage?
The rule. Okay. Well, you should be keeping your mileage in a log or a mile IQ or whatnot. And the law or the rules. Okay. Well, you cannot take mileage to and from a W-2 job because that is commuting. Okay. Here's an example. As actors, we go to the audition, right? And then we'll go to the callback, and then we actually go to the job where we get the W-2. Now, Ronnie and Ernie, if I say this wrong, let me know. But you cannot write off driving to the shoot, right? Because that's to and from a W-2 job. But you can write off the things that lead up to that, right? The audition, the callback, the meetings, those sort of things. But you cannot write off to and from commuting. You can write off to and from 1099s all day long. So if you have 1099s, y'all keep that mileage. But I don't really, I hope that helps. Ernie, Ronnie?
I just want to say, well, first of all, when it comes to deducting the business vehicle, as I call it, you either have a choice of actual expenses or a mileage rate. And the mileage rate, I think, was 56 cents a mile last year. I know it's going up this year.
Yeah.
Anyway.
Yeah.
But usually it's the mileage rate that's higher. And from the audits that I've been in, the representing clients against the IRS, I always find there's 2 or 3 things they love. And one is they want the total miles. I've given auditors the odometer readings. I remember specifically where they said, oh, you got odometer readings. They're like, yeah. And I've seen one guy do calculations for like 5 minutes. He goes, oh, in LA, that was 16,336 miles. That makes sense. You have your total miles. And he got the mileage log and he goes, can I look at it? He took it for like 5 seconds. He just handed it back. And it says a lot of times in the exam, if you don't have a mileage log, please recreate it. But it's always good if you have it yourself and keep track of it. But then you drive your car, it falls into either that falls into personal, commuting, or business miles. Personal is getting gas, groceries, going to grandma's. Commuting miles to and from a job, getting paid on the W-2. That's where actors, like Emily was saying, get confused because they go to set. But nope, that's you. If you're, and then there's business miles, and that's anytime you're trying to advance your career and you're not getting paid for it. As a matter of fact, you might be paying to go to class or something, or picking up supplies.
I concur.
You guys were so lucky to have 3 tax pros, not just 1, but 3. So keep those questions coming, because this is awesome. This is a wonderful free resource. So throw those 4 question marks in front, 4 question marks behind. Looks like I have a related question to the question that was just asked that came through. Does that change if you're traveling and staying overnight?
It can. It depends.
It can. Yeah, it depends. Yeah, go ahead.
Are they reimbursing you? If they're not, then yes. To and from, like if I go to Phoenix, Arizona, or maybe I drive to New York to do a movie. Wow, it's a long trip from here. But the trip there would be deductible. Now, to and from set would not be from where you're staying. But if you're paying for lodging, then you could deduct your lodging too. I'm sorry, that's a little convoluted, but maybe Ronnie or Emily can make it more clear.
Well, it's anytime that you're outside of your anytime you move, you drive outside of the range of what would be considered like your, I guess, your city or the local area. That can be a little bit amorphous as to what that is. LA is a very big, sprawling city, and so it's debatable as to whether if you drive to Orange County, that's still considered part of the local area. But typically you will get, if it's a W-2 job, they will typically reimburse you. And that's when you know that you could have written it off if they had not reimbursed you. But as a general rule, and then I would say, yeah, Ernie's right. If you drive out of town, of course you can, if it's for a job.
And I'll just say this, y'all, you have to keep your business miles for actual expenses or the standard mileage. So if you are keeping gas receipts, and those are actual expenses, and you will need your business miles to calculate both. So it's always good to keep your mileage.
Yes. Just to add to that real quick, I had a lady once got audited. She went to Alabama to do a movie. And so she had a receipt for gas for one in, I think it was Arizona, New Mexico, Texas, as she went, and each was a different day and a different location on the receipt. And the auditor was, oh yeah, we can deduct your mileage because you have proof that you actually went there.
I have a question in the chat about if other people can record this, but this is being recorded. So you guys will have a record of this in the future. So no need to worry there. All right. Next question is from Sharon. She was advised that they will automatically get a $14,000 deduction, and therefore it is better to do a short form or to not itemize, as you will get back more of a return that way. Is that correct?
No. Well, first off, 14,000, where's that at? I want to know where that is. The standard deduction's 12,500, isn't it, y'all? This year?
12,550 this year.
550
for single.
For single, yeah.
Single person, yeah.
Mm-hmm.
Now, if you have if you're blind, or if you have other, then there are, if you're a senior, then there is an added. Maybe that's where the 14.
Maybe that's the 14. Yeah.
But it's still not. I mean, it's still what we said earlier still applies. You would never choose less than 14 if you have a standard of 14. But if your standard is, the normal standard is 12,550, and so you would never choose less than that. But it's still, you, like we said before, you still want to keep all your records and stuff, because if you have the 1099 income, so you have Schedule C, you might get value there. And I guess I'm being redundant at this point, but it's, and also if you have the qualified performing artist, then you'd want those deductions at that point.
I think it's always good to keep your receipts regardless, because what if later you get a notice from the IRS and they go, oh, you had 1099 NEC, non-employee compensation, you didn't include it on your return, then maybe you can include some of those expenses at that time.
And is it still 7 years? Is that still the number of years to keep tax records or receipts and things?
Yes. I mean, I would say 7 years, but I will tell you, and you all let me know if I'm incorrect, but I believe the IRS has 3 years to send you a letter. Not to say I would still keep it for 7, but usually the IRS will send you a letter within 3 years after you file a return if there is a situation. Is that correct? That's what I've heard. Yeah.
Yeah. That's about right.
Yeah. And my understanding is that they typically won't. They only have a certain amount of time to challenge your deductions.
Right.
But if you have not been reporting income, they can go as far back as
they
want to.
And
that's right.
if you're using a tax software or someone, they'll always take, like she said, the standard deduction. They will take whatever's higher. They're always going to take what's best for you. If you put things into the software for taxes or whoever you go to, they should be doing what's best for you as an individual.
This next question comes from Julie. She says, how the do we fill out the new W-4? I keep getting screwed.
I hate
Boys, take it away. It's a fun one.
Well, it varies. Each individual is different. That's the problem. They changed it a couple years ago, so everyone's gotten confused with it. I always say do step 1 and step 5. Step 1 is putting in your information and checking the box single or married, and then signing it. I don't know if I want to get into all this. Go ahead, Ronnie.
And I suggest always checking single or married filing separately, because if you're married, likely your spouse is making money. So if you check the married, they're not going to take out enough. So you check the single box, sign it, and you're good to go. Because the only way that W-4 works is if you have a standard income that's coming in every year the same, and you're married, and your spouse has a standard income that comes in all the same, so that you can put everything on there and figure that out. But as actors, it's going to be all over the place. So the W-4 doesn't make any sense for us.
Yeah, it doesn't. And I think everyone should know that. We're all in it together with that. But I concur with what Ernie's saying too. Just fill out the top portion, sign it, push single or married filing separate. Yeah.
That's exactly why this event is extra awesome.
Yeah.
Is because it's catering to us special folks.
I want to say this. You should always look at your paycheck stubs and look at your federal withholding.
That's
and
right.
if not enough is being withholding, then you need to change your W-4 and get your tax professional to help you.
And to throw in, because you may be getting screwed by if you've done commercials and you're getting paid by Extreme Reach.
Yeah.
They will not, even if you fill it out correctly, they will not withhold enough money. They don't start withholding until you get to a certain level.
8,000. It's 8,000.
Okay. And so they will leave you short almost every single time. So what you can do with Extreme Reach, one thing they do that most payroll companies don't, is that you can give them percentages, but you may have to do it after the fact. You can send them a fax. I know fax, but you can, I think that's what they require. But you call them first and say, I want to change. And then you can, depending on where your income's going to be, is what percentages you might want to do. At the least, you're going to want it to be 10 federal and maybe 3 state. But if you're making a little more money, it might be 15 federal and like 6 or 7 states. I'm talking about percentages. And then as you get up higher, then you want to raise those percentages as more money starts to come in.
Next question is from Joanna. How do you know when it's time to start a Schedule C?
It will be time anytime you have any money that is not on a W-2 that has come through cash or from a 1099, then you have to start a Schedule C.
That's right. Yeah. Any non-taxed income. I mean, that's not rental or, well, that'll be a whole, okay, that's a different workshop. But yeah, that would be any 1099, Patreon, Venmo, PayPal, blah, 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 any money that's coming in that's not taxed would be on a Schedule C, honey.
Yeah, and let me say this. I have a lot of performers that receive cash income. Like I used to work at a hotel. You're getting a lot of cash income and you're depositing in your bank account. The IRS can audit for one of 2 reasons, either your expenses or your income or both. And I'm finding that they actually audit income quite a bit, actually. and they can pull your bank records and go, what are all these deposits for? So just be aware of that.
Let's just say this. There's no under the table income, y'all. Put it in your pocket. No. Okay.
Yeah, a lot of times the question that gets asked a lot of times is that if it was under $600, do I have to report it?
Oh, yeah.
That $600 thing is only for the person who paid you. They don't have to report it unless it's $600 or more. But you have to report it if it's $100, if it's $50, you're supposed to report it.
Interesting.
I think the IRS rule number 1 is all income received is taxable.
That's right. Okay.
I thought that was also for people filing their taxes, that if it's under $600, you don't have to report it. So that's really
incorrect.
interesting.
Yeah, you got to
Well,
report
if you
it.
think about it, it makes sense because like if you come do taxes with me, it's not, unless you're doing a corporate return, you're not going to pay more than $600.
Right.
And so, but then there might be, 300 of you that come do that with me. So if I didn't have to report any of those, then like I could, nobody's giving me a 1099. Nobody's telling me, so that's, if you think of how that money can stack up, then it makes sense that you would have to report. Where it doesn't make sense to a lot of times people is they just had like, oh, well, I made $500 and that was it. And it's like, well, the IRS still wants to know about that. That by the letter of the law, they want to know about that little $500 that you made.
I think that's why a lot of people, when they go to a restaurant or a place or this, that, or whatever, they spend the cash on the thing instead of depositing in the bank. That yeah. Okay. All right. This next one is from Nikki. How do I let the IRS know that the amount the W-2 reports is much higher than what I received from my agents? Do you need that again?
No, I got it.
Oh, you got
it's
it.
It's because your W-2 represents what your gross income was, and unfortunately, under the tax law that exists right now, you're getting the income after your agent's taken it out, and after they've after all the taxes have been taken out as well. But that's probably what you're experiencing. Because you actually receive the income. If you make $50,000 as an actor and you pay your agent $5,000, you actually received, your gross income is $50,000, not $45,000, unfortunately. And right now, as it stands, you're going to have to pay taxes on $50,000 and not on $45,000. Unless you have a corporation. But that's that's a whole other discussion.
And the next question is from Alice B. I itemized deductions up to $17,000 a few years ago when the general deduction was $12,000, and I didn't get a cent more than $12,000. Was a lot of useless work. This was for federal, maybe on state in California? Question mark.
Oh my gosh, I zoned out. Oh gosh, what was the question again? I'm so sorry. I was reading the chat. I'm so sorry.
She itemized, pardon me. They itemized deductions up to $17,000. A few years ago, when the general deduction was $12,000, this person did not get a cent more than $12,000, felt like it was a lot of useless work. This was for federal, maybe on state in California, question mark.
Oh, okay.
Well, it comes down to, again, each person is different and each individual earns different income in different ways. Well, one person works on a movie, another person works on a commercial, somebody juggles as a clown. There's all different ways to receive income. So it really depends on the individual. But once again, I go back to being a professional in this business. If you can learn how to keep track of expenses and know your income and different things, whether you end up using it or not, it'll teach you as you start to make, my goal is to make more money in this business. I don't know, maybe some people not, they're like happy where they are, but I would say, you might not, maybe you didn't need it that year, but it's a good idea to keep good expenses. Go ahead.
I can say you did get value out of it. You got 17, you at least got value out of it in California, unless you made less than 17. And so you got a value by that. But and the old number was actually 6,000. Unless you're married, then it would have been 12,000. And so if you didn't get more than 12, then something went wrong. Because before 2018, you would have gotten a benefit out of it. So I don't know what happened. I don't know what happened there, but if it was after 2018, then it is 12,000, and it's going up every year. And the 17 would do you no good if it's unreimbursed employee expenses on the federal return, but it would have given you California, which I think you put in the question, you would have gotten value out of it in California, and quite a bit, because the California standard deduction is like less than $5,000. It's like 4,800, or I can't remember what it is.
Yeah, I think so. Yeah.
They're trying to get through Congress the new regulation or new law about the QPA, or qualified, or not the QPA, but the performing arts deduction, where they can now adjust your expenses against your income. They're trying to get that passed through Congress, and we're hoping that'll happen either this year or next year at some point, so that people who make less than 100,000 for individual and 200,000 for married filing joint can use our expenses and adjust them against the income. That's what we're hoping for here in the near future, we hope.
Ernie, this question is for you from Stephanie. You mentioned QPA, and if you make less than $16,000 per year, please elaborate and explain what is a QPA.
Okay.
Well, people always go, QPA stands for Qualified Performing Artist, which means actors go, I want to be a QPA. I go, it means you have a very modest income, first of all. You have to make less, all incomes combined, you have to make less than $16,000. You have to have 2 W-2s for more than $200 that are performance related. And then you can do an adjustment. You can put all your expenses on this form 2106, and you can adjust the expenses against your income. The people who usually qualify for it are kids. Fine. Or it's someone who lives with their parents and they're not making a lot of money.
Yeah, when it was put into place, it made more sense, and it doesn't make sense anymore.
No, yeah, I think it was in the 80s somewhere. Yeah. They need to adjust it for inflation, and they haven't. That's why we're talking about doing this whole new thing where they switch it to 100,000. So, but we'll see.
Well, you've been in the tax game for a while, so you remember like the evolution of things. So that makes sense. Matt says, married filing jointly. We take standard deduction, but got a New York City artist grant this year, 1099 miscellaneous, paid performers in cash, and had equipment rentals and other miscellaneous expenses. How do I Schedule C this and take above the line deductions when this isn't a business, but was paid from the state as a miscellaneous income? I'm not incorporated or anything. Do you need any part of that again?
I'm not entirely sure. I mean, that's a tricky one. If you spent money directly against whatever it is they gave you, then you can route a 1099 miscellaneous to a Schedule C. So if you spent the whole 10K, then I would say that's your best bet. Just route it to a Schedule C and take the deductions.
Yeah, agreed. And you can definitely do that. Yeah.
I would concur with that. Now, they said they paid people in cash. If they paid them more than $600, they're supposed to issue them a 1099 NEC, I believe.
Boom.
If it's less than that, then they didn't have to, but they can still take the deduction, and they need a record showing that it was paid out.
You guys know so much. Oh, this is great. All right. Next question is from Kim. My residuals were paid by the payroll company in 2021 and appear on my W-2. However, the money did not process to me until 2022, which is when I paid my agent the 10% in 2022 for my Schedule C. Is that amount for the agent included in 2021 or 2022?
2022.
Yeah, honey, it is 2022.
Is it about when it left your pocket?
Yeah,
you operate on a cash basis. So I saw someone said I should talk louder. Are you guys having a hard time? So I'm gonna talk. It may sound like I'm yelling, but I'm on a phone here, so maybe that's the problem. But you're I forget what the question was. Now I got distracted.
It was a little confusing too, but go ahead, repeat the question.
I'm going to repeat it. This is my residuals were paid by the payroll company in 2021. And those appear on the W-2, the residuals themselves. So, but the money didn't process until 2022, which is when Kim paid the agent 10%, which was in 2022. So 2021 taxes or 2022 taxes for the amount that went to the agent.
And that's you operate on a cash basis, not an accrual basis. So it would be when you actually paid your agent. That's the year you take the deduction.
The IRS term for that is constructive receipt.
Oh,
Somebody
good.
throw constructive receipt in the chat, please. Please do that. All right. Okay. Let's see. Next question. This is from Jesse. Is there any way outside of an S or C Corp to write off commission, non-QPA, like 1099ing your agents or manager?
I will answer that real quick here. I mean, okay. So you do not need to issue a 1099 to a corporation. That's Glen Oaks Boulevard, very loud. Sorry about that. Now, I say that, right? So I'm with Abrams. Abrams is a corporation. When I pay my commissions to Abrams, I do not have to issue them a 1099, right? Issuing a 1099 to your agent is not going to allow you to instantly write your commissions off, okay? I feel like that might be out there and I don't know why. I will say this flat out. We cannot write off our commissions on the IRS return. It sucks. We all pay 10%, 20%, we do. Take a deep breath. 2025 is when things reverse, okay? Unless they do it before then. So basically, no, right now for the IRS, there's no way around writing your commissions off legally, is from what I've seen for the IRS side. Is that answering the question?
I think so.
Okay.
I think so.
Really, that's exciting. Oh, I hope it's exciting. Usually people get real mad and then I'm like, oh gosh, we need an energy clearing.
Oh my goodness.
Happy joy. We're doing taxes.
Yeah, right.
So two things, guys. We maybe have around 20 minutes or so. So just a little time check. And for the moderator of the chat, I am popping back up to the question submitted ahead of time to make sure that question gets answered. This is how to treat the $100 COVID stipends we received each time we were tested. A stipend is not supposed to be taxed. However, all the production companies taxed these payments to us, and they were included in the W-2s that we got. The question is, how do we get back the portion of each stipend that was taxed? One CPA told me to deduct all the COVID payments received as an expense on Schedule C, but that doesn't make sense since it's clearly income.
I'm with you, Ronnie.
I don't know where the idea came that the stipend's not supposed to be taxed. That would be my answer to that.
I concur completely.
Yeah, me too.
If union fought very hard for us, so if you went and got a COVID test, you got paid for it, which was great. So now you receive the money. The other choice is not to get paid for it, so you could write the mileage off and other things, but we would rather get paid. At least I would as an actor. And unfortunately, you have to pay tax on that.
Yeah, it's income. Yeah.
It's income, yeah.
You guys are all on the same page, so that answers that. Another related question, don't you need a business license even if you earn little or no money?
Well, if you've had a Schedule C, yes. You may have a Schedule C one year, you may not the next year, but you would, if you're talking about the LA City business license, yes, once you have it, you should just keep it and do the exemption every year. Is that correct?
Yeah, I just renew mine every year.
Yeah.
It doesn't cost you anything to renew it, and you can just do it online.
Right. And if you make zero, because you're supposed to.
You just say zero.
Yeah, they say, well, how much did you make? And you're like, I don't know. I'm in 2022. I don't know what I'm going to make this year. You base it on what you made last year. So if you made zero, that's zero. Yeah. And if you do it every year and you work in September and you get a modeling job and they pay you $5,000, you're like, woo! But now you have a Schedule C and you didn't file your exemption. Well, if you do in advance, then you don't have to worry about it. Sorry.
Right.
That's right. That's right.
Right. Okay. Let's see. This question comes from Vernon. At what point should one consider LLC versus S Corp? I realize it's case by case, But is there some general advice that you could provide on when it's time for an LLC or an S Corp?
Oh my God, this question gets me so heated. Okay, I'm going to do a little bit here. Y'all listen up. An LLC, and I'm talking in California, so hold it. An LLC, an S Corp, and a C Corp all pay at least $800. Okay, so I want you to know that before you do any of these entities. Second off, if you are going to form an LLC, you need to make sure that the person that is going to issue you a 1099 to the LLC will do that to an LLC, because there are companies that will not issue 1099s to LLCs. And if you don't know what I'm talking about, that might be a problem, because that would be the reason that you are LLCing, right? So I think LLCs are a waste of time for an actor. I'm going to say it, where we get into the realness of it. It is great for liability. If you need it for legal reasons, that's wonderful. If you're doing it for tax reasons, it's not going to help you most of the time. Okay.
I'm going to just only interrupt because there's some folks that are confused on what is the difference between an LLC and an S Corp, and what are they anyway? Some people have never heard of them before. Exactly. And then there's also some people that are like, what's a Schedule C? So I think if we can do like maybe a little education interlude for a second before we move on to answering.
Does anybody?
Well, an LLC is just it's a limited liability company. And for the purposes of the IRS, it is considered disregarded. So it only costs you more money. It does nothing for you from a tax perspective, zero. It is a disregarded entity. Most of the time, what you'll have an LLC for is only for legal purposes. And like most productions are LLCs, because they're just a pass-through entity that needs a liability protection around it, so that they don't have to pay off the investors if it goes belly up, or if somebody gets hurt. There's only so much that you can sue them for, I guess. And then a corporation is an entity. Is there's an LLC, there's corporation. A corporation is a whole different kind of entity that exists on its it's just treated completely different. Both a corporation and an LLC can elect to be treated from the IRS as an S corporation. So the S corporation that you always hear about is actually just a tax treatment. And so if you, and I would typically say, but you would want to ask someone before you make this decision, that if you want an S Corp, that you would probably start it as a corporation and then make the S Corp election, because as Emily said, you will run into sometimes, if you have that LLC after the name, there are sometimes that you might go in to, you might book your series regular and Disney says, we don't pay LLCs, even though it's an S Corp, even though it's taxed as an S Corp. So, but I also have had clients that have LLCs that are taxed as an S Corp and have never had a problem. But I've had clients have problems. So that's the quick and dirty on that, I'd say.
I want to add to that a little bit. That's awesome, Ronnie.
Good job, Ronnie.
We were talking about Schedule C. That's for someone who's self-employed, basically. They're a sole proprietor. They run their own little business and they don't make a lot of money. So they want to just run the business themselves and they claim it on their tax return. Now, people always go incorporate. Now, if you incorporate, I always tell people to think about certain things. One is, are you making enough money to incorporate? Because what are you protecting? Do you own, several houses? You have a Picasso, you're driving a couple of Ferraris. Okay, yeah, then maybe you want to protect your assets. But if you don't have that kind of money and I have, my old TV and a beat up microwave, what are they going to sue if they get you? Okay. And then once you incorporate the $800, like Emily said, you have to pay to the state. You have to pay for your individual return. You have to pay for a corporate return now.
You guys, there's so many questions. Everybody's eager to know things. And we're staying in the LLC and S Corp land of it all. When's the right time to incorporate? Is there a threshold you should be earning to make it worthwhile?
Yes.
Yes. Go ahead, Emily.
Yes. And I think this coincides. If we didn't answer the LLC question, please bring it back. But this is what I will say, and I know Ronnie, you have a different number. So this is something that once you hear all of us say this, you need to look at your own personal tax situation and see what works for you. One answer is not the same for every single person, okay? What I will say to this is, and this is conservative, so I know that you can probably go a little bit less. When people ask me about Corps, I say if you are making 150, and this is even with the new tax law of 18, okay? Because we did the numbers over here. 150 consistently in the same flow of income, then look at incorporating. Here's the thing, if you incorporate because you are in a series and the series runs for 1 year, and then the next year it does not run, you still have that Corp. You still have to keep up with the Corp. You have to file the returns and whatnot. So, and the less you make, so if you make less for me, 150, you will be most likely putting more money out than you are getting tax benefits of it being in place. Does that make sense? So that's my take on it. I know y'all have different numbers, so yeah.
But does that include both entertainer income and artist support job that is not necessarily?
No, that doesn't. That's why I said same income. So actor income, 50, same income, right? That's not your total income, which could be Uber driving and acting or whatnot.
Exactly why I brought it up. Yep.
I would say it. I would have a different number for sure. Because I would say at 150, your benefits at even at $100,000 having a corporation, it depends on what you're willing to put up with in some ways, and then it also depends on what your expenses are. So if you're making $100,000 and you have an agent, manager, and lawyer, you're paying $25,000 out in fees, and that's not even counting all the rest of the fees you might have. So you might have $30,000 to $35,000 in deductions, and you're going to be in a 22% bracket at that point. So if you have $30,000 in deductions, then that's $6,600 that you're saving with a corporation. It depending on what your fees are, it depends on what the fee schedule is. So with the corporations that I service, if I'm doing everything, it typically is going to cost them about $3,000 a year, and that is a pretty low number because that may be where the numbers are different or something. But to me, it would be worth having it for that reason, because you can always shut the corporation down. So even if you had 2 years worth of, even if you had those fees going into the next year, you've still kind of at least broken even in that scenario. Whereas at 150, I'd say depending on your expenses, because that even if you add in your other income, so if someone comes to me about a corporation and their husband or wife makes a lot of money, then really I'm only looking at expenses to see what's your average expenses? Because if the husband or wife makes $200,000 a year, then they're already in a tax bracket I'm only looking at expenses at that point. So because there's two things that factor, you have to find out what's your marginal tax rate, and then how many expenses do you have in that marginal tax rate. So you could theoretically break even at somewhere like $70,000, but I wouldn't suggest you get it at 70 because you're not necessarily going to get value out of that every year. And now you've got the headache of having a corporation. So you'd have to know that you're going to continue that you'd have to have a good feeling that you're going to continue to do pretty well. And because there are other parts of the story, because there's something called the QBI that jumps in with it, which is qualified business income deduction. This year, there's the pass-through election entity tax thing that's actually kind of a pain, but it actually saves people money. So there are other irons in the fire that's why my number would be quite a bit lower than Emily's.
Each person's different, so it depends on the individual.
Yeah,
that too.
This is definitely a hot topic, you guys, because another LLC S Corp question is it too late for 2021 to file for one?
Yes.
Yes.
Yeah.
And we're in 2022.
Yeah.
Well, I mean, you can technically get a Roth IRA up until April 15th of the following year. So some people might be thinking of those kinds of rules, I
You
mean,
can't reassign income though. That's the problem.
mm,
So what you made in 2021 was under your name. You can't now reassign that. You'd have to undo all of those W-2s, all of those tax payments.
right.
So
You have to have it first and get paid through it first. Yeah.
Correct.
Yeah.
Yes.
You have to have it before the job. If you've had a job this year, you can't. Like, you can get incorporated today, but you can't cover anything else that's happened before today.
Let's see, moving on. If you received unemployment last year, do you have to pay taxes on that as well? Is there a limit to the amount of unemployment you can receive before paying taxes on it?
You have to pay taxes, and for 2021, there is no limit. The good thing is 2020, with the relief package, you were able to take out 10,200 per like if it was married filing joint, you got to do double that. But no, for 2021, it's all taxed. On the IRS side, it's not taxed on California side. New York, yes, you have to pay.
Okay, thank you for that. Let's see. Going back to the S Corp. What if you have an S Corp, but the job you did paid you in W-2 and the agent took 20% commission out of your W-2 income? How do you deduct 20% out of your W-2 income from your S Corp?
You can't. They're two different.
Yeah.
They're two different entities. They exist on one of the things that I like to emphasize for people with corporations is that a corporation is a different person than you. It's a different entity. And so like going back to that you can't assign income one way or the other. So if you have income that's flowing, that even if you have if you have an S Corp and you do a job and they pay you mistakenly, then you want to have them unravel that, because you can't do anything with those deductions technically, because the IRS is going to say, well, that agent was paid out of that W-2 income. You can't count that on your corporation.
I think there's some folks that they want to protect themselves from being sued. So that's the idea, is that the LLC or the S Corp gets sued and not the individual, so that you're protecting your assets, your personal assets.
And then it comes back to the legal aspect, which is what we all, Ronnie said too. For an LLC, it's more legal than tax. And I think people sometimes think, oh, I'm going to get a tax benefit for having an LLC.
Right.
Ernie.
Yeah, and they don't.
No.
Paying a lot of money, but it's okay.
Yeah.
Not necessarily. If you have a lot of, you have assets to protect, then it's definitely worth it.
Of course.
Okay,
Yeah,
this comes from.
Go ahead.
And
I would just say consult someone legal if you're considering an LLC for, if you want to do a film or something like that. It's then an LLC is the right entity for you. Just know it's not a tax savings vehicle, but it is a legal liability vehicle. So you talk to a lawyer, not us, because they may be able to tell you whether just getting insurance is good enough or whether you actually need to have an LLC structure to protect yourself.
Yeah, attorney's the way to go. All right, this comes from Judy. If you start and deposit money into a Roth or other IRA before April 18th, 2022, can you write off this amount for your 2021 taxes?
If it's an individual or traditional IRA, yes, you would adjust it against your income. There are thresholds on that. I don't know off the top of my head. That's why I use the software. The Roth isn't an adjustment, but if your income was low enough, you might get a retirement credit. But Roths are not taxed. They're considered part of your income. So when you pull them out later on when you retire, they're not taxed. So you can expand on that, you guys.
Oh, I think you got it. So yes, you can, right?
Yes, you can. Yeah, but not a Roth. So just know that a Roth is not.
Right.
It's not a tax savings vehicle at the moment, but I love Roths because just know that you don't ever pay taxes on that again. And that's going to be pretty amazing whenever you retire.
Yeah.
Right. Protecting your future.
Mm-hmm.
Mm-hmm. Okay. Natasha's asking, do we still need to keep receipts, or is there another more efficient way to show proof of expenses? And how long do we need to keep these for? We kind of addressed this before with the whole 7-year thing, but technically they have 3 years to follow up, right?
When they can audit or send you a letter or whatever 3 years from when you filed. If they find the same mistake 3 years in a row, the IRS could go back 2 more years. So I would suggest 5. Most accountants will say 7 years, which is fine. And then, yes, you should keep your records. And then California usually has 4 years to audit your tax return.
And it's fine if these records are digital?
Yeah, as
They don't
long as
have
you
to
can
be
print
on a
them
piece
out
of
and show
paper,
them
right?
proof if you need them for your audit.
Yeah, and I think receipts, it's tricky because, you know, a lot of times you'll know that you have stuff in bank statements, and those are iffy, but it depends on the auditor whether they would accept things in them. So technically you'd want to have the receipts.
Okay, we're having a little side discussion here. We're going to go until 5:30 p.m. Pacific because everybody loves you guys so much. So let's keep going and try to get through these questions. Whew! This comes from either Carolina. What is everyone using to track expenses, invoicing and reconciling accounts, Divvy, Waves, Zoho Books, etc.? Does it feed into tax prep software, and which ones are best?
Hi. I mean, I love the QuickBooks, but that's a bookkeeping software. And isn't it Actors Track? Is that the, no, okay. Am I talking about my butt?
QuickBooks Self-Employed wouldn't be bad. I don't really know these programs.
Hey, community, there's like 100. Yeah, there's like 130 of us here. So if you guys have the answer to that question, throw it in the chat. Like, let's help each other out.
I think each individual is different too in the way they want to track their records. Some people prefer apps. There's phone app picture receipts now. You just got to make sure you back it up to the cloud or you lose all your receipts. And I lost my phone. Well, there went all the receipts. Some people use Excel spreadsheets. Some people just keep track on an organizer and they keep all the receipts. Some people just put all the receipts in a box and take 3 or 4 days and total them up at the end of the year. Whatever works for you. You got to find a system. You are
no one right way.
Yeah.
Well, and I think people need to realize once you set up your system, it will be easier every year. Yeah, the first year is going to be more tedious, but once you got it set up, you just put it in the folder, put it in the Excel spreadsheet.
And you can adjust it as you go if it's not quite working for you and make it better or whatever. Yeah.
Mm-hmm.
Continue to educate yourself.
By coming to these.
Yes, Quicken too. Sorry, I saw somebody said Quicken. I'm like, yes, Quicken too.
That's a good one too. Some people use Mint.
That's another one. Yeah.
The free one too.
Yeah, and it's a freebie. This comes from John. If we are only paid on W-2s through the studios, can you still itemize expenses?
We kind of addressed that, but the answer to that right now is yes, you can, but the IRS disallows business expenses until 2025. So on the IRS side, you won't see it, but on the state side, you most likely will see it.
Awesome. Okay. Vulnerable question. You guys, I just wanted to say that people are brave for asking these questions. Yes. So I just want everyone to know this is a safe space.
Of course.
So I'm not saying any names. If I have not filed 2017, 2018, 2019, or 2020 taxes, should I file those first before filing 2021 taxes? And then there's another person that piggybacked on that said, if you filed your taxes wrong, you can go back and fix previous year's taxes, right?
Correct. Amended returns. That is correct.
So I just want to address, should this person handle 2017 through 2020 first, or handle 2021 first and then go back?
Handle 2021 first, because you're late on the others. You might as well wait. Although 2017, let's see, that'd be, you're 2018. If you think you get a refund, then I would do that one first, because
I think you can get a refund from the state, but you can't get one from the feds right now, can you?
For 2018?
Don't you get 3 years to get the refund?
3 years. Yeah.
3 years. So 19, 20, 21 right now, right?
Right. But you're dead from the deadline. So your filing deadline would be April 15th, 2019 for a 2018 return.
Correct.
So that would get you to April 15th, 2022. So you could do that. I would say the 18, if you think you're getting a refund, then do the 18 return first, get it done by April 15th. And then besides that,
Yeah, you're right.
you're not going to get a refund for 17. And so if you owe money, then, you know, if they haven't talked to you yet, then I don't know if you want to because you think they would have come after you. Although, I say that kind of jokingly, if you have a bunch of money that you haven't reported, then I would say,
oh yeah,
get
on it.
Yes, you got to report that. But other than that, you know, do 18 first, and then 21's fine. 2019, just make sure you do 19 before next year.
And 18 has to be paper filed too. Yes.
And I just want to say, unless you have an NOL, right, a net operating loss, and this would be something that you know, that's something where you would want to make sure that, you know, you're doing them in order. But yeah, get 18 done and then 21. And it's okay, just do it. Don't get nervous and not do it, right?
Okay, this is from Mo. Do I need to 1099 my agent? I realize I pay taxes, but my agent gets 15% of my pre-tax amount. Does that kind of address it too?
I addressed that earlier. You pay your agents if they are a person. So if it's Joe Schmo, yes, issue them a 1099. If it's Abrams, which is a corporation, you do not need to issue a 1099.
All right. Deborah asked.
To throw something else in there.
Okay.
Oddly enough, from a technical perspective, if you're repped at a place like CAA or ICM, those are not corporations. They're partnerships or LLCs. So you technically are supposed to send them a 1099. They probably will laugh at it, but that's what you're supposed to do.
But yeah, I mean, you can if you want. It's a good paper trail, right?
Right.
Yeah.
Right. No, I mean, you're actually supposed to. You're actually required. An LLC is not a corporation. So an LLC is supposed to. So strangely enough, CAA is not a corporation. It's an LLC, as is most of the big agencies are not, but some are. So you have to look, you have to find out from them or go look on the Secretary of State website to see if they are an LLC or a corporation. If you want to be like really clear, because I mean, technically that's what you're supposed to do.
We got a thumbs up from the person who asked the question.
Oh, okay, Mo.
So what about union dues, deductible or not? Like to SAG-AFTRA?
Same thing. They all go on the same part. Union dues, commissions, all these things. We know we all have to pay them. We understand that, but unfortunately with the IRS law right now, we can't take it on IRS side for W-2 income, even though we pay it.
And there's a verbiage clarity. Deduction and write-off means the same thing, correct?
Correct.
True.
Pretty much.
Right?
Yeah, that's the thing. We can use multiple. It's like saying you're self-employed, sole proprietor, Schedule C. There's all different things for
same
like allowances and deductions. Yeah, go ahead. Dependents.
But deduction and credit are not the same thing.
Correct.
Often confused, but not the same thing.
Good call.
Final 8-minute stretch, you guys, from Sharon. I've been advised that, oh, nope, we did that question. All right, that's okay. From Judson, anything to specify with lost wages and or pain and suffering? I have the W-2 slip and the 1099 NEC, but I've never dealt with this before and I hope to never again. Lost wages and or pain or suffering.
I think what they're saying is they got a settlement, maybe.
Oh, you mean a lawsuit? Okay.
Yeah. So whatever the check usually they receive has a statement with it, either a W-2 or a 1099 miscellaneous, and yes, it is taxable to them. If it's not taxable, then they usually don't have a form. Your lawyer should be able to answer that for you.
Okay. From Alice, my last year's tax information was hacked. And so I didn't receive 2 of my Fed stimulus checks, my tax refund and my California stimulus check. I have called and written the IRS hundreds of times. Does anyone have a secret IRS number or a person who can help me to get those missing 2 Fed stimulus checks?
Sorry.
You got to file your returns, but yeah, I don't know.
You have to file an identity theft affidavit. And
that's what I was thinking.
There you go. Get your PIN.
If anybody else has tips for this from the group, throw those in the chat too. But sounds like
there's no secret number. It's just it's a process that you're going to have to go through to get yourself straight with the IRS, and and it's like you essentially have to prove that you're who you are and that was not you filing.
And going forward, you may want to create an account and get an IP PIN. Well, they probably already going to give you one, an identity protection PIN, which is you have to put in this number in order to file your return, or that will not be accepted.
Thank you guys for that. Let's see, from Carolyn, if we used TurboTax and received a different adjusted refund, like $1,000 less than expected, and they said on a letter that they sent to us because the non-refundable child tax credit for other dependents credit, we have 2 school-age children that qualify for the credit. Is the child tax credit refundable or non-refundable from last year, 2020?
It's refundable.
Yeah.
Right. It's refundable. Okay. If I worked in Canada, it seems that I am double taxed. Is that true?
Yes.
Yes, double taxing from Canada.
It is.
All right.
It is complicated, but essentially, if you work in Canada or any foreign country, what you're guaranteed is to pay whoever's got the highest tax rate, because you will get a foreign tax credit for what you pay in Canada, but you will not get the foreign tax credit will not equal what you paid in Canada.
Final 5 minutes. This is from Julie. W-2 New York must report all income. So now paying huge amount to New York after only paying a $10 residuals. I know about IT 203/203B, but is there any way to have a W-2 reissued with just New York income? Was nervous when the CPA mentioned she'd have to manipulate the numbers to get me the exact money made in New York.
I think I know what's going on there. New York requires it. So if we're, say I'm a California resident and I had worked in New York, I have New York income. New York is required, and this has gone through the legislation for New York, that you have to report all income in box 15, isn't it? I'm so sorry about the boxes, but showing the state income. What that person needs to do is find out what just the New York income is. And this sometimes, like on GEP Talent Services, they do split it up, right? So they'll have California and then they'll have New York. And then over to the right, they'll have Cat Show in New York, $50, which means there was only $50 that was the New York income of the total that's in box 15. Does this make sense?
Yeah, I know what you're talking about. And usually I look through all the different W-2s and figure out how much was for New York. And that's what I put on the New York side.
Yeah. Yeah, you got to figure the New York part out. Ronnie, do you have anything for that?
No, you're exactly right. New York requires that you put the full amount and for whatever reason. And so you have to, your tax preparer has to, you have to provide your tax preparer with the info if it's not already showing there, but then your tax preparer can figure out how to put in the right amount that is actually for New York.
Correct.
Awesome. Thanks, guys. All right. Last 3 minutes. This comes from Vernon. What percentage should we consider removing from a paying gig to create a cash cushion for the following tax period? So I think anticipating taxes. I guess if you're on 1099 and you want to anticipate how much you want to put aside.
Oh, yes. I always say 20% to the IRS, 10% to the state. That's going to be way higher than you'll get a refund by doing those numbers, but that's an easy number that I usually tell people. But yeah.
Depends on how much you make, and if it's a 1099 NEC, I guess is what they're talking about, non-employee compensation. If you make less than it, hopefully your W-2s absorb it. But if you're going to make a lot, like I have people work trade shows and they'll get $20,000, $30,000 for 3 weeks of work, which is great because they love actors and hiring them. But then they should send off an estimated tax payment when they receive their check.
Yeah, and the more you, like Ernie said, the more you make. I mean, I can tell you, if you make $75,000, if you clear $75,000 on 1099 income, you're going to pay $25,000 in tax. So because you have to deal with the self-employment tax, and that's the thing that most of the time people do not account for, and that's 15% of your net income without even considering the federal and state taxes, and that's a huge number.
Kind of a sidebar to that. I had someone who won a game show one time and got like $400,000. So they came to me and we did an estimated tax payment in advance, so they wouldn't owe so much at the end of the year. So.
Wow. Okay.
That's a good win.
Wow. That's a big win. All right. Let's see here. Okay. I got it. All right. So last two questions. What about gifts? Do all gifts have to be under $600?
No, you
Two
can give
different
whatever you
things.
want. It's not a write-off. A business gift is only a write-off. You can only write off $25 per person per year.
Yeah.
So if you give an agent or a manager a gift, if it's worth, that would be worth $25 for that person. What if it's Abrams, like the $25 to that
per
agency?
person?
And
No,
that-
per
I mean,
person there.
if you're giving
Okay.
it to the office, then like you could, it might, depending on
List
how,
everybody's name on the receipt.
yeah, right.
There you go.
$25 per person. Got it. Okay. This final one, this is about you guys. Do you offer any tax prep services for actors or artists? If so, what are your fees if you don't mind? And then any suggestions of where an actor may require help with tax prep? Please put your links in the chat so people can reach out to you if you're okay with that.
I'm totally fine with that. I do have a course. If you are like, what? I have a course that goes through all of this stuff pretty easily. It's called Brass Tax Lady. So if this is just help. Yeah, I'll put that in the chat. But yes, I work at M&M Tax Pros. We all do actors' taxes because we're all actors too. So yeah.
From the right off, I'm an actor primarily. Go ahead.
And then Ernie, when you pitch yours, if Emily, you don't mind popping that in the chat, that would be awesome.
Well, we're not. I'm just going to say we're not actively pursuing clients, but what we do is we take on clients during non-busy times because we like to spend an hour or two with them and explain how we work and get them in the system, because it's easier if they're in the system when we get into our busy time, so that we don't have to take 2 or 3 hours to try and get them up to speed. So if you want to reach us, it would be in the non-busy time. Ronnie, go ahead.
Mine's, I'm putting my, I'm trying to figure out how to do this chat while I'm still doing this. I just put mine in there. It's just mine's easy. It's rsteadman.com. And I'm open to new, but it's similar to Ernie. Like at this point, I probably wouldn't be able to see you with, at least until April. And I might have spots open in April, but in general, probably somebody new, similar to Ernie. It'd probably be better for us to plan to extend and do something outside of the tax season.
I would say also a lot of times, maybe you guys, we might take people on extension and then file them sometime after. They have to pay, if they're going to owe money, they may want to make a tax payment in advance, file an extension, and then do it later.
Love it. Just as a friendly reminder to everyone before we end this fabulous session, don't forget to save the chat. If you do not know how to save the chat, click on the chat. There are 3 dots to the right. You click on the 3 dots and the little save chat pops down. Click on that save chat and open it in a folder. Oh, what happened? What happened?
Oh, I'm so sorry. Kim Reed. Hearts to you, love bud.
Yeah, I know that one too. She's pretty freaking awesome. So, and then, as a final plug from me, I run a hyphenate artist mastermind. If anybody wants to join, my Instagram handle is it's Courtney Shane, ITS in front of Courtney Shane. Norma, yes, it's being recorded, so they will notify about a rewatch opportunity. All right, you guys. Wow. This was amazing. I'm so sorry we weren't able to get to all the questions, but it's better to have more questions than no questions at all. And this has been an absolutely fantastic time. I am scrolling up to the top to find my closing statement. The conclusion is, on behalf of the SAG-AFTRA Foundation, I want to thank you for sharing your experiences, process, and craft with your fellow performers. Thank you so much for being here. This has been a fantastic, amazing educational session, and we thank you so much for your time and everyone here.